Morning to the Fractal Effects live stream. Please make sure you read the disclaimer. If you're following along with us, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Now let's jump onto the charts. We have NAS on the left, US 500 on the right, close to getting a bullish confirmation. We have an upside expansion model. We've had a big bull run. Usually when we see a big bull run overnight coming in from London, we do have a deeper retracement than this, but this could be one of those days where it just continues to run. So we're getting a confirmation. Let's see if this sticks. 3 minutes 45 seconds. And then we want to see a retracement back closer to the 20 EMA. Two minutes 54 seconds left. Right now NAS is a little stronger. It was quick to take out all previous highs. US 500 lagging a little bit. When it's this bullish, it's comparable to a runaway freight train. So we want to see it do at least a decent retracement. So until it touches that 20 EMA, I'm not interested. Hopefully the 20 comes and meets us here in this fair value gap. That's around 50%. Not quite the golden zone, but we might even get a range extension that brings that 61% up. Otherwise, like I said, I could just keep running. "22 seconds left. Let's see if this confirmation even sticks. We could actually just drop below the dealing range. That confirmation suddenly disappears. Like it's happening on US 500. 9 seconds left. Confirmation stuck. We do have a huge gap. We have a breakaway gap here. Huge distance from the 20 EMA. So like I said, it could actually just continue up from here, but until we see a decent retracement, until it comes into our station, our point of interest, there's no point in just jumping on. It has to come into discount. Right now, this is 50% of the dealing range. Usually Thursday's model footprint retraces back to our weekly range, which is painted out right here by these two aqua lines. It doesn't have to. It is a high probability. But the way this has been going, we want to see what it does here. If it pushes through, if it does want to give us a false day, or if it wants to bounce off of this and continue up. Slowly getting a retracement now. Let's see how far we drop. 20 EMA, now sitting in that fair value gap. Let's see if it continues to drop. We got a fair value gap right underneath as well. But I'm more interested in this one for now. Still just stuck there. 26 seconds left. For our users, make sure you watch the videos in the Learning Hub in sequence as we go over market dynamics, how we use these specific tools, Fibonacci, fair value gaps, in sequence with the indicator and the strategy. There's a reason why I outlined this fair value gap and not this one. Our 20 EMA now sitting right at consequence encroachment midpoint. Getting that push down. Slowly pushing down now. We're getting some reaction off this fair value gap, but again, I'm not interested. Not with this big of a bullish run. Could just take off without us, that's fine. But until I get a decent retracement, until I see it drop at least into discount, that's 50% right there of the dealing range. Not sure if you can see it's hidden right under the fair value gap. We're now sitting in the fair value gap, right at consequence encroachment with the 20 EMA. I want to see it hit around here. Then I want to see what kind of reaction we get. And if it takes off without us, it takes off without us. That's fine. This has been a heavy news week. We had FOMC yesterday. We had a successful trade yesterday in oil. Every day there is something to watch. Doesn't mean you have to take a trade every day, but if you're going to take this seriously and treat this like a real day job, you want to make sure you're watching the markets at least every day. Today we had some minor news, or at least it was earlier in the day, earlier in the morning. We're still getting reaction off that fair value gap, but again, I'm not interested. I'll paint it out. We're getting reaction right off that midpoint, consequence encroachment. Keep in mind, if you're having a tough time seeing where these fair value gaps are, the indicator paints them out for you right there. All you have to do is go in and drop a box tools right here. That way you know where the midpoint is. You can extend it across. Right now for the indicator, we didn't want to kind of messy it up by drawing all these across. It just becomes too hard to see certain points of interest. The only ones that are extended across are our actual fair value gaps of interest. These are powerful PD arrays, but I'm not sure if we'll get down that far today. 20 EMA now, again, inside the fair value gap, sitting at midpoint. We're getting gesticulation, reaction off the consequence encroachment of this fair value gap. But until we retrace a little deeper, until we hit that 20, I'm not interested. We're still sitting in premium. It's not an area I want to buy. And this is where most traders get stuck. They see the market going up, 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 and they want to jump in. Why would you jump in at premium? You got to wait for it to come into discount. Getting that reaction slowly now. We want to push past this fair value gap. And I want to see what happens here. Again, this is NAS on the left, US 500 on the right. These are the CFD contracts. Going forward, we'll start looking at some of the futures contracts. I know that CFDs can't be traded in the US, for example. So we will switch over to the futures contract just so it's everybody's kind of on the same page. Strategy works regardless of which contract you're looking at, what pair. So we're getting some reaction, again still off that fair value gap, but until it comes down here, comes under 50, which by the way the strategy dictates it's going to. We look at Fractal Effects on the dashboard, it shows you that 82%, there's an 82% chance that once we get confirmation that we are going to retrace back into our range. This is all algorithmic trading. 20 years of historical data, all filtered out in graphs and charts for you. So patiently waiting. US 500 now at the New York fair value gap, the fair value gap of interest. This is a area where powerful moves happen. We're back at the 20. Let's see how far it continues to push down and what kind of reaction we get. We're slowly heading towards the golden zone, 61%. We're already at 50, which is also pushing NAS down now. NAS finally coming down to that fair value gap of interest, close to the 20 EMA. Again, make sure you watch the market dynamics video that goes over definitions of how all of these PD arrays and these indicators work together. Don't just blindly jump in. Even though we made the system as easy as possible to read, paint by colors, still you need to have some understanding of how this actually all works together. And again, if you're following along with us today, make sure you're in a demo account. Make sure you're also using a pip calculator so you understand how to calculate your lot size. Just type in lot size calculator on Google. There's more than a few free ones. And never risk more than 1, or at the beginning even 0.5. And our risk to reward is usually 1 to 3. So we're risking 1 to make 3. We're getting some reaction now. US 500 bouncing a little before 61%, right at 50, right in the New York fair value gap. This pair might be ready to go. We're obviously looking at it on multiple time frames. And the indicator paints out all the main areas on those multiple time frames. So 37 seconds left for the 1 minute candle to close. I want to see if it's creating any fair value gaps. NAS still has not hit the 20 EMA. So we have a fair value gap right here. I'd like to see NAS, since these markets work in tandem, we want to see NAS at least hit that 20 EMA, otherwise US 500 could take one more swipe down. US 500 slowly coming back down towards that smaller time frame fair value gap. Okay, let's hit it. Let's see if we get some kind of a reaction. I want to see an engulfing candle. "19 seconds. It's pushing past the fair value gap, violating it. I want to see if it closes within that fair value gap and wicks outside. Nah, still pushing down. So we did not get that reaction on US 500. 40 seconds left. Keep in mind, I'm looking at the same asset on 3 different time frames. There's only so much we can show you on the screen though. "19 seconds left. We're currently below that fair value gap on US 500. Nah, still driving. 7 seconds. If I don't get the engulfing candle I'm looking for, I will not be interested. No. So once we've violated a fair value gap and we don't trade back into it immediately on the next candle, then the market could push down further. So now I'm more interested in watching NAS hit this 20 first before anything happens over here. NAS finally at that fair value gap. We've hit the 20. Now I want to see what it does on a smaller time frame. pushing even deeper into that fair value gap. Nothing of interest yet. US 500 slowly making its way towards the golden zone, 61%. We are below the EMAs now. Still nothing interesting. On NAS, we want to start seeing it drive up to let us know that this thing actually wants to take out the highs. Could go even deeper, 61%, hit the 50 EMA. Still not interested. US 500. Still stalled there, close to the 61%. Remember, we wait for all these points of confluence to see when this retracement is going to end and the next leg is going to begin. We don't just jump in at any point. These are all red candles. This is the first green candle forming on US 500. And again, we're near the 61%. It's creating too many straight lines there. Got about 1 minute 40 seconds left on these candles. Again, that's NAS on the left, US 500 on the right. Still driving further. Still at that fair value gap, but again, no signs of any bullish behavior. US 500 also stalled there, right between 50% and 61%. We're officially at 11 o'clock now, Eastern Standard Time. See if we get any kind of reaction. Still nothing of interest here. NAS is still driving. US 500 getting a little sloppy here. A little bit of consolidation. Let's see if it spikes down, hits that 61%, gives us some kind of reaction. There's another fair value gap here. The NAS is moving into now. 61% and the 50. Not to mention the New York fair value gap is down here. This is a deep retracement. So we want to make sure that we get more spikes and rejection here and not just pushing down, because if we break the bottom of this, that's considered a false day. Once we get confirmation, there's an 80% chance that the bottom of this will not be broken. So the second it is, that falls into that 20%, decreases our probability. We're not interested. Remember, these rules are here to make sure you protect your balance. US 500, now at 61%. Getting a little bit of reaction here. Starting to get some movement now here on a smaller time frame. Still between 50 and 61%. We're below the 20 EMA now. So there's a chance this could spike down, hit the 50 and touch the 61%, then push up. We're already getting some kind of a drive, bullish drive now on a smaller time frame, but I want to see if any fair value gaps stick. .23 seconds left. We are getting a fair value gap forming here. Let's see if it sticks. 10 seconds left. Let's see if the market retraces back into getting a big drive now. So this is our fair value gap on a smaller time frame. Let's see if the market retraces back there. We're now on the other side of those EMAs. It's leaving breakaway gaps on the 1 minute. US 500 giving us a reaction off that fair value gap. That might be the better one to take. Just trying to see what it would look like. Definitely room for growth. That's the bigger fair value gap that's been painted. That would be our entry. US 500. We do have a fair value gap here. We're actually sitting inside the New York fair value gap from open. Both markets coming back down to those fair value gaps. Back at 61%. Close to our stop loss. And it just stopped us out. Again, we're back at 61%. NAS also giving us that reaction off that fair value gap. For US 500, we're now waiting for another bullish sign. Now that we've taken out the lows, we want to see if NAS also takes out those lows and hits the 1 minute fair value gap that's underneath. So we're not interested now until we see that reaction also on NAS, where it most likely sweeps these lows, taps the 50, then goes up. Or they could have just paused NAS while they swept the lows on US 500. But until we see these lows swept now, we're not interested in either market. So we're too close to 61%. US 500 just took out the lows. I suspect this will as well. Hit the 61, the 50, and then we'll look for a reaction there. This could also be a turtle move, where again they pause NAS, sweep the lows, and then they both push up. We're still at the New York fair value gap. We're at the midpoint. So again, we have a divergence happening between NAS and US 500. US 500 just took out those lows, hit 61%. NAS has not. So either they pause NAS to gather more liquidity for US 500, or they're going to push this down as well to hit the 61% before they both go up. In a situation like that, we just wait. And again, if it leaves without us, it leaves without us. I want to see if it comes back and takes out these lows right here. US 500 still floating in that same area. We're getting a reaction off New York's fair value gap. It's having a tough time getting through it. Let's see if we can't find another trade setup within the next 15 minutes. I'd like to see NAS take one last swipe down here. Either way, NAS is the stronger of the two pairs. So we're no longer interested in looking at US 500 for the buy. NAS could possibly give us an entry. I'd like to see it come back down here to the consequence encroachment of this fair value gap. Might not give us an entry. And this can happen sometimes when you're looking at a different market. Both of these were parallel until it took the lows here, which then this made this a better buy. So if it comes back down, gives us some kind of an entry, we're interested. Otherwise, this could just take off without us. Back at the New York Fair Value Gap. Looks like NAS is just pushing now. Might not come back and give us that entry. And again, that happens sometimes. Both these markets were working congruently, and then they paused NAS to take one last swipe down. And you can tell that's the manipulation move when it doesn't happen over here, and it happens over here. That's that divergence, which then makes this the stronger pair. A little over 10 minutes left in our stream. Let's see if this continues up or if it comes back down. So if NAS truly is the stronger one, it should not need to come back and take out this low. But if it does, tap 61% and bounces back, that could make it possibly interesting. US 500 now pushing right through. Just trying to see where that safe trade would have been. Down here, this would have already been in a safe trade, with the highs being 5.15R. And again, that happens sometimes. We literally got stopped out by, we were 2 ticks under here. 0.4. Looks like we're heading to the tops. To take out the tops, most likely 0.5 standard deviations. About 9 minutes left in our stream. Let's see if it gets all the way up here. Now remember, the market is either taking out liquidity or filling in inefficiencies. And when two markets like this that are supposed to be parallel show this kind of divergence, it goes to show you that they just paused NAS because US 500 needed more liquidity. So they took one last swipe down, gathered that liquidity, and now they're both moving back up. So if we were in the same trade on NAS, instead of US 500, we would have still been in it and in profit. But at that time, we had hit 61%. This was the better buy. And then as soon as it swiped, this became the better buy. This was the stronger market that did not need any more liquidity. But that happens sometimes. Let's see how fast we take out these tops now. Or if we get any kind of bounce back from the top of the dealing range. Now that we're on the other side of this, I would use this fair value gap as another potential entry, but I'm not sure if there's enough room there. I like to catch moves right at the bottom. Let's say we went to the low-hanging fruit of 1 standard deviation. Right now our stop would have to be below this. That gives us 3. So if this comes and swipes down here, we're also at a New York fair value gap on the 1 minute. If we come hit this consequence encroachment, touch this 20 EMA, this might be interesting, but I want to see an engulfing candle. But if we take these tops out before that happens, then I'm not interested. If we take out the highs first. About 5 minutes left. Let's see if it comes back down or it just continues up. About 4 minutes left. Again, we're on the other side of that New York fair value gap. The 20 is under us now. Three minutes left. So again, if NAS takes out these highs before we see any kind of retracement, we're not interested, because then we're seeing even more divergence. That means NAS took out its highs while US 500 hasn't. Then it could just drop back down to take out the lows like US 500 did. Three minutes left. We're starting to get that retracement now. NAS still the stronger one. Does not want to fall back down into this fair value gap. About 2 minutes left. Now we are getting that retracement back to the New York fair value gap on the 1 minute. I want to see what happens here. I want to see if it taps that fair value gap, if we get any kind of rejection. Let's see if we can't get back into this fair value gap in the next minute. We're now at 11:30. We're past the point where we're actually interested in looking. We are getting reaction on a smaller time frame, but that's the fair value gap I'd like to see it at least draw back into. That's where that 1 to 3 risk to reward would have made sense. So we will conclude the session there. NAS will most likely run, take out the tops now. And going with the divergence, once NAS takes out these tops and US 500 does not, that means they could both drop after that. That's why we don't like to see this much divergence happening. Make sure you check us out on fractaleffects.com. Make sure you hit that subscribe button, turn on your notifications so you know when we're live. We're live Tuesday, Wednesdays, and Thursdays. So we will see you next week.